Let me play the world's tiniest violin for all the people that are crying about this new super tax. From the media to news articles to social media, everybody's talking about Labor's $3 million unrealized gains super tax that is set to come through on the 1st of July this year. And I've got to say, the media is doing a great job of making the everyday Aussie thinking that this is somehow going to affect them. They've got the average Aussie, somebody who is never even going to have $1 million in super, thinking that this is going to affect them tomorrow. The stats don't lie. The median Aussie is not even close to $3 million. Even $1 million is not even close to that. Even if they started working during super was introduced, they are still nowhere near it, especially if you're a woman. But the media would have you believe something completely different. So in this video, I'm going to talk about what this tax actually is, the context of superannuation itself, and why I think that this is a step in the right direction. So let's talk about why super was introduced in the first place. The government legislated this because they knew that Australia is going to have an aging population, and if the majority of the government budget is going towards paying pensions to people, this is going to cause a massive problem and a massive imbalance in the years to come. So to take some pressure off the system in the long run, superannuation, which was compulsory, was introduced. This was brought in so people could self-fund their retirements. They also threw in some tax benefits, like if you make extra contributions and earnings within the fund, it will be taxed lower than your normal income tax. So if you look into this and understand the intention of super, you'll quickly understand that this was never introduced for people to start hoarding generational wealth. It was made so people could retire with dignity, not so billionaires can build tax shelters and pass them on to their kids tax-free. And the reason why I'm mentioning billionaires is because right now there are 42 super funds in Australia which have more than $100 million in assets. So just think about that for a sec. Just 42 super funds control $4.2 billion in assets. These guys are receiving more than $140 million in tax concessions from the government. And if we expand this to the 100 biggest SMSFs, they control a total of $13 billion. So do you see how we went from super is for retirement and to take the pressure off the system and for people to self-fund their retirement, to a system where you've got the top 1% as usual hoarding an insane amount of wealth inside these entities, and they're getting these tax breaks. Now look, I don't have an issue with people investing and trying to build themselves up financially and setting themselves up for their retirement and for their kids as well and helping them out. This whole channel is about finance and investing, so I'm not going to look down on anybody trying to build themselves up and investing and so on and so on. That is completely fine. These people have built their wealth based on the legal system and they've done it legally and all that type of stuff. So there's nothing inherently wrong with what they've done because they're simply following the rules which was given to them by the government. But I want you guys to take a step back and really ask yourself, do people that have $100 million in their SMSF, do they really deserve the same tax concessions and the same tax breaks as somebody who has 10K in their super or even 100K? To give you guys some context, 100K in super is still quite difficult to get for a lot of people, and it is quite a significant milestone for the majority of Aussies. 100K is 0.1% of $100 million. So these two people are playing on a completely different scale. They do not even come close. And this is the problem when it comes to wealth inequality. If we're ever going to tackle this, if we're ever even going to try to level the playing field even just a little bit, unrealized gains needs to be looked into. If you look at some of the wealthiest people in the world, your Bezoses, the Zuckerbergs, and the Musks of the world, how did these people get rich? They got rich based off of unrealized gains. They created companies that employed lots of people, and those companies did really well. Therefore, the ownership that they have in those companies ballooned, therefore they made their wealth, and it's all based on unrealized gains. They owned a piece of the pie that just ballooned into trillions of dollars and hence giving them enormous wealth. And when you look at SMSFs, the same thing is happening. People have bought into properties that have grown in value. They bought into equities that have also grown into value, that has ballooned their SMSFs over the $3 million mark and into the $100 million status and into the billionaire status as well. So we can see that wealth inequality is largely, or basically all of it, is caused by unrealized gains. So we need to be honest with ourselves and ask the question, do the people that have billions or hundreds of millions in their SMSFs, do they deserve the same tax concessions, the same tax breaks as somebody who only has 10K in their super and is just starting out? Because at this point, like, let's be honest, these guys are taking the piss. It's not even about retirement anymore. It is just an entity that is set up to keep on compounding wealth, to keep on stockpiling assets, and that's about it. We are way past saving up for retirement at this point. When you get get to the 7, 8, 9 figure mark. Because how the system currently works is that with the people that have 8, 9, 10 figures in their superannuations, they are way past saving for retirement. It is just about hoarding assets and just keep on, compounding their wealth and just keep on exponentially growing it. So if we want a fairer tax system, these tax concessions for the ultra rich needs to be looked into, because it doesn't make sense to me that the top 1% that control billions in assets are getting the same concessions, the same tax breaks as somebody who is the bottom 1%. So what this tax is doing is it's only applying on amounts above the 3 million, not the whole 3 million, similar to how your income tax works. There are different tax brackets. So if you're an everyday person, you can still take advantage of all the benefits that you get by salary sacrificing into your super, by making those contributions into your super, getting the 15% tax rate compared to the high income tax that you would be probably paying, and keep taking advantage of that. Only the bit that is above $3 million gets taxed at an additional 15%, and this could be income or gains. I want to repeat this, it is not a tax on everybody, it is only for the people that have above $3 million in value of their SMSFs or super funds. It is not a tax on everybody, but if you watch the media, they're going to have you believe that this is going to impact everybody right now. I can tell you right now that the things which are impacting me as a Gen Z is the cost of living and the housing affordability issue that we have in this country. This tax is not even in the top 10 of my concerns right now. And if you're somebody who is young right now or is a millennial, you should understand that this tax is only going to hit 80,000 Australians based on estimates, because these are the only people that have more than $3 million in super right now. For context, this is less than 0.5% of Aussies. The people that are in this bracket, these are not your everyday Aussie battlers. These are not everyday Aussies living everyday lifestyles who earned everyday incomes. These are truly the top 1%. To even get to this point, you have had to have significant earnings throughout your career, or you would have had to have a successful business and pay yourself a very high amount of super every single year to even get to this point. These are not everyday people that have reached over 3 million. If you guys want an anecdotal example, in my career in banking, I have seen the financial positions, the incomes, expenses of the people in the top 1%, as well as the people in the bottom 1% who are just trying to make everyday ends meet. They're trying to buy their first property or whatever it be, but they're just not there yet. And I can tell you, like, hand on heart, the people who are at the bottom 1% will never ever get to $3 million in super. They're just not even close to it. And this is the case with the vast majority of people. They are simply not going to get there. I mean, sure, you can whip up a compound interest calculator and put in favorable figures and put in those projections to make the case that the everyday person will hit over $3 million. But I can tell you right now from personal experience for the last 8 or 9 years in banking, the average person is simply not going to get there. And the reality of the situation does not match projections on a calculator. My take on this tax is that while it's not a perfect tax, and I'll get into why in part 2 of this video, it is one of the first steps that the government can take to make the super system fairer, and reminding people that super is about retirement. It is not about hoarding assets and just stockpiling assets. For sure, there are legitimate concerns around the fact that there is no compounding, and apparently some politicians get a free pass. They won't be affected by this. You need to understand what's going on with that, and I'll dive into all of that in my next video. But overall, this is a change for the better. So if you're curious about this, please follow along and subscribe. Stick around because this conversation deserves nuance, and I'll see you guys in the next video. Bye now.